Let's talk about the stock of KenGen. Is this just a cheap stock at the Nairobi Securities Exchange, or it is Kenya's giant in the renewable energy sector and is bound to see its shares continue appreciating at the Nairobi Securities Exchange? Is what I want us to talk about today. So, just at high level, the stock of KenGen at the NSE is moving. And just to give you an example, year-to-date share price gain has been 21%. That tells you in that 2026 alone is gained by 21%. 1 year gain has been 50%, and 5-year gain has been 60%. That tells you the shares or stock of KenGen is on the move at the Nairobi Securities Exchange. And beyond that, profitability is also growing because look at, for example, the financial year of 2025, because KenGen's financial year ends June of each year, and then the audited reports come out by the end of October of each and every year. Therefore, the only financial reports which we have that have the full year numbers that have been audited are the ones for 2025. Looking at those numbers, the profit after tax was 10.48 billion Kenya shillings. Profit after tax growth was 54%. Yes, the profit after tax growth was 54% in 1 year. And beyond that, profit before tax was also on a good trend because it had grown by 41% that year. And beyond profit and also share price appreciation, dividends were also looking good because dividends were on the rise. Financial year 2025, dividends were 90 cents or 0.9 Kenya shillings per share, whereas in 2024, it was 65 cents or 0.65 shillings per share. Dividends increased by 38.5%, which of course is an amazing increase in 1 year. And even so, the payout ratio was 57%, indicating the company was willing to share a good chunk of the profits with shareholders that year. And the trend has actually been good over the present past years. Having said that, now the big question is this. Given KenGen has gained by 50% in 1 year, right? Is KenGen still a bargain, just looking at the share price at the NSE? Or has the market already priced it in the opportunity needs to be priced at? Let's talk about all that in this video for you to really understand if the stock of KenGen is still worth it or the market has already priced it appropriately. In case you are new here, my name is Afagza Sifuna. I am a finance expert and qualified accountant, bringing you amazing videos about investing and making money each and every day. In case these are kind of topics which you like, down there is a button called subscribe. Click the button for you to subscribe to my channel so that you don't miss the amazing videos I do post each and every day. And I will still add it, drop a like on this video. Having said that, when you are purchasing the shares of KenGen, what exactly are you buying? You see, KenGen is Kenya's power generation giant and is Kenya's leading electricity generator because we're talking about it having over 60% of the Kenyan generation market share. Approximately 1786 megawatts installed capacity, okay? And over 90% renewable energy capacity because remember, it does measure in hydro, geothermal, and even wind as it continues expanding to even other areas. So it has the ideal mix of generation sources, right? Right from hydro, which is the majority of this generation source, geothermal, wind, and then thermal at small balance or small capacity. It has a very big hidden opportunity, okay? And the biggest hidden opportunity with KenGen is that it also operates geothermal drilling and consultancy business, which most people out there don't know. KenGen has actually supported a ton of countries out there when it comes to drilling and consultancy around generation of electricity. So when you are buying the stock of KenGen, when you look at the business, you are buying a dominant power generator, okay? Additionally, you are buying a geothermal expert or a company geothermal expertise. And beyond that, you are also purchasing renewable energy growth potential and dividend income because KenGen has already proven it pays dividends, okay? Having said that, is KenGen growing? I want us now to start crunching the numbers, okay? Let's look at the financials. Let's look at revenue growth of KenGen, okay? In 2025, KenGen did have revenue of 56.6 8.1 billion Kenya shillings. All right. Looking at the first half of the year of 2026, the revenue was 30.1 billion Kenya shillings. This tells us the year-on-year growth is approximately 9%, right? Which tells us the revenue growth is moderate. Okay. Then, when we look at profit, in financial year 2025, the profit of KenGen was 10.48 billion Kenya shillings, right? Which of course was a bump up of 54% from the previous year. Then we look at the first half of 2026, KenGen's profit is 4.22 billion Kenya shillings. It tells us the profit is most likely going to decrease by about 20%, assuming all factors held constant. The thing is this, the profit is still strong, even though there is volatility on that end, okay? Then, looking at EPS, KenGen is doing amazing numbers on EPS because the EPS of KenGen has grown over the past 5 years. And just to give you an example, using the previous 3 years, okay? KenGen's EPS in 2023 was 76 cents or 0.76 Kenya shillings. In 2024, it was 1 shilling and 3 cents. And then 2025, it was 1 shilling and 59 cents. That tells you earnings per share of KenGen has been growing, which is an amazing indicator for investors out there, okay? And then when you look at electricity generation, KenGen has been doing amazing numbers and it is strong. And I'm saying so because for financial 2025, generation did grow, okay? It increased, and these ensure that KenGen continue producing more and more electricity for the country, okay? And even beyond that, also the growth on renewable energy, where is targeting to grow by about 5,500. We are talking about KenGen being on the positive trend when it comes to growing its electricity generation capacity. And then when you look at generation mix, the generation mix is very excellent, guys, because KenGen is generating through hydro, geothermal, of course, those are the two dominant ones, and then also capitalizing on wind, and at a small balance also looking at thermal energy. So all these renewable sources of energy is using to generate electricity for the country are amazing, and it is an ideal electricity generation mix. Okay, so beyond that, let's look at non-generation revenue, because remember, as I said, KenGen is also consulting for even neighboring countries, all right, around different areas. So when you look at non-generation revenue, KenGen is doing very, very amazing numbers when it comes to geothermal drilling, consultancy of the business, equipment services, and even regional contracts. That tells you KenGen is on the upper trajectory when it comes to it ramping up its business and even diversifying to other opportunities out there, okay? So how good is KenGen's business, right? Let's look at the key matrices which you also as an investor you need to know for you to really pinpoint if KenGen's business is very good across all the fronts. On profitability, it is very strong because profit, when you talk about the operating margin, did increase by 24.3%. Fair enough. On net profit, it did increase by 18.7%. That tells you that is a strong progress on profitability. When we come on return on equity, this is where there's a weakness on KenGen's stock, because return on equity was approximately 3.7%, right? And this is because KenGen has a huge equity base, right? So it currently generates relatively low returns on shareholders' capital. And that is why I'm saying it's quite weak, because it's about 3.7%. And then when you look at return on asset, also return on asset is weak. Please remember, KenGen is the kind of company which is asset intensive, okay? And this is so because total assets of KenGen are approximately 505 billion Kenya shillings, but it generated 10.46 billion in profit. Therefore, its return on asset is approximately 2.1%. And this is so because, as I've said, the company is capital and assets intensive. Then, when you look at operating cash flows of KenGen, the operating cash flows are very excellent, okay? Because financial year 2025, we are talking about 30.6 billion Kenya shillings, which is very excellent, okay? And then the capital expenditure for the year was approximately 13.6 billion Kenya shillings, meaning it continued generating cash internally and even having the surplus, okay? Then, when you look at debt, KenGen has a debt of 112 billion Kenya shillings, right? But much of this debt is to the government of Kenya because they have an agreement around called on lent or concessionary financing. So most of the debt is by the government of Kenya. Therefore, it is manageable, but it is important to flag that yes, it has substantial debt. Let's look at dividends. Does KenGen pay investors dividends? The beautiful thing about KenGen is that its dividends have increased year on year over the past 5 years. And I'm saying so because 2021 dividends were 30 cents per share. 2022 dividends were 20 cents per share, a slight dip, okay? But from that continued picking up. 2023 dividends were 30 cents per share. 2024 dividends were 65 cents per share. And then 2025 dividends were 90 cents per share. That tells you dividend has been increasing. And even looking at the financial year 2025, the payout on KenGen profits was 57% payout. That's what the company decided to pay investors out there. And of course, the yield was somewhere between 8% to 10%, depending on the share price which you're going to utilize for you to compute. That tells you on the dividends end, KenGen is doing amazingly well because a payout of 57% and a dividend yield of slightly upwards of 8% is very amazing for a listed company at the Nairobi Securities Exchange. Okay? Now, let's look at valuation. Is KenGen stock undervalued or overvalued? We're going to look at these using a few ratios. Okay? Starting with price to earnings ratio or PE ratio. The PE ratio of KenGen is somewhere between 6.5 to 7.5 times, which honestly pinpoints towards a possible undervaluation because remember, as I've said, ideal PE ratio is typically upwards of 10 or even 15 depending on sector. And then when you look at the PB or price to book ratio, the PB ratio of KenGen is 0.2 to about 0.26 times. This tells you when you look at the PB ratio, KenGen's stock is severely undervalued, right? And then, of course, as I've said, dividend yield is 8% to about 10%. And when you look at the EV stock EBITDA ratio is 6 to 7x, which of course is a key ratio when it comes to the capital intensive kind of undertakings. So when it's all said and done, all this ratio tell us that they are in the green. Simply put, they are indicating that KenGen stock is lowly valued or undervalued in the market, right? And then when you look at the risks associated with KenGen's business, please remember I mentioned it's very intense on capital, even when it calls for getting capital to drill, for example, new plants and so forth. So among the risks is capital intensity, which is this a very capital intensive business. Secondly, low returns, okay? And we're talking about low ROE and ROA, as we've seen. Also, we're talking about a risk around hydrology, right? Because hydro generation depends on rainfall and also water availability and levels. Third risk is project execution, okay? Because it could be very ambitious, but then again, the success of any ambitious project they embark on is pegged on very many factors. And then fifth is Kenya Power or the counterparty risk, right? Because KenGen's economics are linked to electricity market and major off-takers, right? If it's generating and then there's issues around Kenya Power, then that's also a complementing business risk. The other risk is government ownership, and then lastly, earnings volatility. Then when you take a look at future growth catalysts, what are the catalysts of KenGen's stock to continue performing well? We are talking about geothermal expansion, right? KenGen's biggest competitive advantage is geothermal expansion. Secondly, the rising electricity demand. Kenya as a country have rising electricity demand to support long-term industrialization in the country. Then third, renewable energy, where it is aiming to tap into 5,500 megawatts pipeline of renewable energy in the country, right? Fourth, we have geothermal services, which it is monetizing as it renders services across continent of Africa because of its expertise, right? Fifth, we have better asset returns. The asset returns are quite high on the assets of KenGen because that tells us it could significantly utilize that to be able to actually scale up the earnings, okay? But the big question is, can KenGen turn its enormous asset base into much higher profits? Hopefully, it can be able to do that, okay? So when it's all said and done, would I buy the stock of KenGen or would I be reluctant? I would buy the stock of KenGen any day, anytime. And I'm saying so because the positives of buying are, first and foremost, the strong dividends, okay? Secondly, attractive valuation. Third, growing EPS. Fourth, strong operating cash flows. Fifth, dominant market position. Sixth, excellent renewable energy exposure. Seventh, significant future growth pipeline. Those are very solid reasons as to why I'd personally buy the stock of KenGen. In case you are out there and you are risk averse, things which could make you not consider buying or maybe could make you wait are maybe things like, for example, low ROE, huge capital requirements, asset heavy business, recent profit decline, and even share price already being up in 1 year. Maybe you could be pessimistic saying it can't go further than that. But when it's all said and done, where I sit at any day, any time, buy the stock of KenGen. Would you buy the stock of KenGen? What do you think about the KenGen business as a business? Is it bound to continue doing well, or it has some challenges? Comment down below. Let's continue discussing. Cheers, guys, and you all stay safe.